Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference, and joining me for the segment we have Zed Osmani. He's the head of Global Long-Term Unconstrained at Martin Currie. Zed, it is great to see you again. Welcome back to Trade Talks.
Thank you, Jill. Likewise.
You got it. And you recently converted a mutual fund to an ETF. Tell us about the ETF and its strategy.
Yes, so we converted at the end of October into November. This is a product that had a long track record of 6 to 7 years, top decile over that period. So we're very excited about what we can offer investors on the ETF conversion. More tax attraction, obviously, for the US market. In terms of what we do, nothing's changed in terms of investment process, investment philosophy. We're still focusing on finding companies in the quality growth space that have sustainable business models, that we look at 5 to 10 year time horizon, being exposed to attractive structural growth opportunities through a thematic lens that is proprietary to our fundamental research. And we focus on the very best ideas, so we at the moment have 23 stocks in the ETF, a very high conviction, very concentrated, typically in the 20 to 30 range of stocks.
How does MCSE integrate sustainability in the portfolio?
It's fully integrated. Our fundamental research team that is on that strategy does the ESG analysis, and we look at companies that have good governance and that are positioned well for that sustainability over that 5, 10 year and beyond in a world that is transitioning towards net zero.
And speaking of transitioning, what's your outlook for 2023?
So for us, for 23, we looked at the global outlook as being one of sharp slowdown rather than recession. And we also had the view that the US was going to avoid a recession. This is more likely to be the case now with China reopening, which was unexpected U-turn, very sharp U-turn. And with China being the second largest economy globally, it will be important to look at the economic momentum of China and how it's going to impact the global economic momentum. So for us, we'll avoid a recession. We're heading into sharp slowdown. There's some element of support for the more cyclical ends of the market in terms of regional exposures, so Europe and emerging markets in particular, where we see more valuation support. Ultimately, when we look at 2023, when we wrote our outlook, we had two certain predictions. One is that forecast error and prediction risk are going to be very elevated, because there's a big range of potential outcomes, whether it's on monetary policy expectations, inflation, or indeed the economic cycle. And two, we made a prediction that the word pivot is going to be used aplenty. And that's really defining the market. The bulls will be focusing on central banks pivoting early, and the bears will be looking at a pivot not before 2024. And that will create that bull-bear debate during 23. So one of our important predictions is volatility is going to stay high. Volatility in style leadership is going to stay high, but we can see light at the end of the tunnel. So for us as quality growth managers, what we've been highlighting is that you don't need to see central banks shifting towards cutting rates for that style to be supported. All you need to see is monetary policy expectations shifting to stabilizing rates for that style to be supported.
All right. Appreciate the insight as always, Ed. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.